Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking metals, precious metals more specifically, and even more specifically, let's talk about gold. Gold down over 1.75% today, reaching $13.30 on the low. This is the biggest down day we've seen since about the beginning of February 6th to be exact. And actually that day wasn't quite as dramatic of a fall as this day, but it is the second down day in a row. And one of the reasons gold is heading lower is we've got a stable stock market environment. The violence that we saw of the correction, the big intraday moves and intraday sell-offs has calmed down. And while stocks are lower and the VIX is higher, it's very calm trading. The VIX has actually settled in below 20. We've had a series of down days in the VIX. We're obviously more than 50% removed from those 50 handle highs that we saw in the VIX. And even though stocks are selling off, they're selling off on a bad report from Walmart. Walmart shares itself down around 9% on the lows today, pushing all the other equities lower, obviously taking a big chunk out of the Dow index. So even though stocks are lower, there's a very calm trading environment. It's a very normal sell-off, and equities themselves are doing pretty well with 80% of the S&P 500 reporting. We've got the stronger dollar playing into some of the weakness in gold. This is the second consecutive day higher for the dollar, and the dollar's been higher 3 of the last 5 days. While we are still below 90 on the US dollar, that stronger dollar is weighing out it as well. It's only up a little bit more than 0.5%. Again, dollar index still below 90, but when it's exacerbated by sort of the stable stock market, VIX, geopolitical environment, that stronger dollar can weigh on gold. Then there's also the matter of gold seasonality, which we don't talk about very much because gold has a general uptrend over 20 years of seasonality, but there's only really 1 month where it starts higher and ends lower very consistently, and that is March. Here we are toward the end of February, only about 8 or 9 trading days left, and you're starting to see plays for that seasonality come into place. Again, if you were going to trade seasonality in gold, the precious metal sector specifically, you'd want to look toward March to be a time when you would sell going into March or even at the beginning of March and just hold. That's a pretty popular trade because, again, it is the only month that starts higher and ends lower on a consistent basis. Doesn't happen every year. Again, I'm talking about 20 years of data, but overall, that is the month where people look for gold to end lower. So gold lower today, over 1.75%. This is Bob Iaccino talking gold futures from the CME Group trading floor in Chicago.